Hey, hello. This is Martin from Hedging, the channel for learning about trading and investing. Welcome to quick market analysis for April 25th, Tuesday 2023, tomorrow. So basically, we would be looking at what happened in the market during the day. We'll be analyzing that and then learning something from it and then plan for a better trade plan for the next day. Let's dive into the charts. Here we have the Nifty chart. So finally, that bounce had come after 6 days of retracement in a relief rally from the bottom, right? So it's a hammer on the Nifty, and the momentum has also picked up. Banknifty charts, you're seeing that it's a wide range bullish hammer. Again, the bounce has come after several days, almost 5 days of consolidation or retracement in an ongoing rally, and rally is probably going to resume. Let's analyze and see further into that. What all things are in favor of the bulls? Yes, the fact that there was a change in polarity bounce that happened today in both indices after 5 days of consolidation is very positive for the factor for the bulls. See, changing polarity is where the price takes the support of the previous resistance on and then bounces from here. So we hammer on the top of the rally. Let's indicate that there is a lot of support from the buyers indicated by the wick size of the candle, but also it could be an indication of a reversal also. Mostly it is a red hammer. But in this case, this is purely a bullish indication, right? Because we had a 0.63% of up move in Nifty and the 1.23. Much stronger Banknifty that closed above the 42,600 levels comfortably, and Nifty has done that above 17,700 hurdle level as well. All the indices are in the bullish zones and rising up. Momentum is, as well as the momentum perspective. Both of them. The Nifty had slipped earlier last week and it has come back above RSI 60. Trend indicator ADX is also in the bullish zones. Both analysis, right? And the moving average 20, exponential moving average 50, 100, 20, all these are down below, and that's a long back concord both analysis. And Bollinger Bands, we had been talking about that last day also, that it is not contracting in spite of the fact that there was a pullback and consolidation that happened. It just straightened out further and then clear expansion of the upside and bullish indication with price greater than the median, and potential up moves are there on both indices as per the Bollinger Bands. Looking at the options ladder, that's also positive. Long build-up is there on the futures Y, and the options Y is saying that PCR is bullish, about 1 for both, much more than 1. See, another factor is that India VIX has spiked up slightly, although the market is pulled up. India VIX has spiked up. So India VIX has been showing this contract trend into the last 2 days. The other day also, when the market has gone down, VIX also went down, which is also contrary. Today, when the market has gone up, the VIX has actually gone up as well, which is also contradicting. So there will be slightly cautious of that. But the fact that the fear and the greed indicator is showing very less of it, 11.6, it's very low regime volatility, where you can take some amount of risk. But at the same time, remember that the VIX itself is a mean reverting nature, and we are at the bottom. So any sudden spikes and market crashes and all should be anticipated, should be kept in mind for black swan events kind of thing, when the spikes can be mega big. So be cautious on that mean reverting nature of the VIX. But otherwise, it's a low VIX regime, less fear in the market, volatility is less, price movements won't be that violent, at least. Looking at the industry of major sectors, the major 6-7 sectors, we see that apart from the IT index, which is in the bearish zones, the FMCG, pharma, realty, auto, all these are remaining in the bullish zones, and so this is regarding the momentum that we talk about. And metal is fallen to the sideways and maintained the sideways. It is not bearish. Bearish is only the IT. If you look at the major index heavyweight stocks that contribute the most to the index, Nifty 50, You can see that it's all the bullish zones except the INFI. So the lines of the TCS could not climb to the bullish zones, but they are maintaining the sideways mode. Another factor in favor of the bulls is that the US indices are not down and medium down. It's persisting definitely. It's struggling at the top of a descending wedge, but it's showing bullish momentum in the short term, and it's trying to break out the same top of the wedge where it has been doing that since quite some time. But the fact that it's on the top and gives bulls the hopes that anytime it can break out and make the moves. So to keep a close watch on that. So all of these are factors in favor of the bulls. Now, what are those parameters that are in favor of the bears? So when it comes to bears, the first thing that comes to your mind is that last week we had a bearish engulfing pattern and the bull trap on the Banknifty. So bearish engulfing is heavily bearish. So today we had a green day breakout kind of scenario of things happening, but the weekly candle forms only by Friday. So only by Friday, this Friday, would we come to know whether that bearish engulfing has had an impact or not, whether it gets negated or not, right? Normally it does not, so we have to be slightly cautious there, right? It's a bearish engulfing pattern, and also it's a monthly candle completing on next Friday. So that would be the fifth month. Fifth month would be a red or a green is something that we would be eager to know, as because historically it has always been green, for most of the time, except for a few instances where it has gone red again. Very few. So those two things, and so 4 weeks back we were in a retracement of 11 to 12% from the swing high. Now we are in a rally which went up to 6 to 9% and then pulled back in 4-5 days, a few hundred points, and then again bouncing up after probably having had gained enough strength to break out further and continue the rally, hopefully. But remember that we were retracing a few weeks back. We were in a big retracement of 12.5, not big but reasonable high, substantial, reasonable, decent enough correction was what we had come out from. We have to keep that in mind, and we are only not fully recovered from there to be super bullish about that. Now the Fyers was selling, and today also they're selling, even when the market has done some kind of breakout. The Fyers are selling some 400-500 crores in the cash market, and this is worrisome. So they've been doing since almost 2 years now, and especially then this year definitely also selling mostly. April had some 9 days of small buying that happened again, but last 5 days they had been selling, and Friday was 2,000 crores and it's big selling. So the fact that institutions, especially foreign institutions, are supporting the market is need to be a concern, and could be a hurdle for the breakouts that the bulls may be expecting. Now the US markets, although we said that it's a bullish factor, considering that it's in the top of the wedge and it's attempting to break out and it's having bullish momentum and all that, but you have to keep in mind that it's at a congestion zone, it's a resistance zone, and any time that could fall down the descending wedge to make big moves. So you have to be carefully watching that. That could be something awful, with respect to the viewers, that the US markets may fall in once again, unable to break out from that congestion zone. Crude oil has already spiked a bit, 10%, and then went up to the 80 plus levels. Now just cool off a little bit and at 77.5, but momentum is picked up, and then would be heading up further. Is a concern for oil importing economy like India. The rupee has been weak forever, and dollar index has been falling down, cooling off and all that, but USD and INR currency pair seems to be very close to the 82 even after all that cool off, and although they are not correlated, the rupee remains weak since long and continue to do that. Along with the crude, it could be a worrying factor. Now the IT sector is dragging. It has been the defensive sector which is supporting always the market when other sectors are falling down. This time it's not happening. and it has beaten down badly due to several factors like the banking crash and all of those, and it is not unable to come out. Some of them are beaten down 40-50%, and unless it comes back, rally, really does not become a rally. Is what I feel like. So when does the ID start at least recovering from to the sideways zones, the bearish zones, is something that has to be looked out for. Now, the monthly expiry is the first financial year 2023 financial year. Monthly expiry is a few days away. This sustained, so volatility could come in the market. Right, a lot of players, the option riders, and all this come in, and then market could be very jittery. And so, if you're very jittery, and you have to be cautious on that. And always one more thing that we have to keep in mind: we still have not completely retraced whatever correction we have made, and the momentum in the medium term, the weekly charts is still not bullish, not about the RSI 60 or 55 or whatever. It's still in the sideways. It is yet to reach that medium term bullishness, as it is not coming. To keep that in mind always until we cross over the 18,300 kind of zones and above. Right? This is some of the factors in favor of the bears. Just to summarize all that we had been talking the last 10 to 15 minutes. So markets finally has bounced up today after 5 days of retracing, consolidating, and all that. And the banking index is the main contributor for that. It's been showing great strength in the moment, and the trend for both indices are in favor of the bulls. So the bands, both the bands are showing expansion on the upside, which indicates further up move. Opportunities is bullish. VIX is in the lower regime, and the indices are green. Or there is a potential for further up move as well. The 17,600, which is conquered last week, and 42,000 in the Banknifty is retained. It's able to hold that. The markets can further rally up, knock on the 7,800, and even towards the 18,000. It could go up. Market view is mild bullish. So for tomorrow, the levels could be 7,600 and 7,800, probably 42,000 and 43,000 on the Banknifty. So stiff resistance could come in, so closer to 7,800, closer to the 18,000, and then beyond this, there's going to be a lot of resistance until the 18,300 is taken out. Now tomorrow is Tuesday, when this to expiry. A lot of participation is happening these days with the levels. As per the OIF, the Nifty seems to be 18,900 and 19,100. Check out the charts of the Nifty, and then correlate these open interest levels, and then you can play the game for some small profit, and take benefit of the time delay if you are an option player. Now, medium resistances levels, just keep that in mind, is 18,000, 18,150, 18,300 above that, 43,000, 43,600 Banknifty. Downside is supports of the 16,650, 16,750 on the Nifty, and 36,600 and 37,400 on swing lows supports. So that's it. My views remains to be mild bullish, right? But you have to be cautious. For the option players, it's safe, but you have to play it safe from your side also by managing the portion size properly, right? And have stop losses and have hedge portions if you are carrying forward overnight, so that your capital is intact even in case the view goes wrong. So the view is clear, the analysis is clear. I hope this helps you to have better clarity on the trade for the next day. If that this video has helped you in some way, consider hitting the like button if you're subscribed already. If you're not subscribed, please share it with your friends and colleagues. And we need few subscriptions more, right? We have very low subscription, and appreciate the help in this regard to keep us motivated. And if you're interested in the Telegram services, check out the description and avail that as well. Happy trading, happy learning, happy investing. Bye bye.